Greetings, everyone, and a happy new year to everyone out there. And thank you for joining us as we take you through what transpired during the final quarter of 2024. My name is Jonathan Wernick, and as always, I'm joined by Craig Pheiffer. Craig, good to see you again.
Hi, Jonathan, and you too. Very interesting quarter we're going to be talking about. Lots of ups and downs. So, let's get to it.
And as they like to say, new year, new me, but maybe new markets. A lot has happened, especially in the last quarter. And I mean, we can't get away from what happened in the US, Donald Trump coming in for his second term. But maybe before we get there, if you can just briefly take us through what happened during the last quarter.
Well, it was quite a volatile quarter. And as you mentioned, Trump was dominant as far as the markets go. If we look at the quarter as a whole, we had a negative October. We were down about 1% on the S&P 500. And then we had the election results, and the post or the after effect of that was a buoyant market. We were up 5.7, and then we just lost a bit of gloss in the last month of the year. So we ended up on the S&P up 2.4% or so. But it was all about that middle month, November, all around the elections, the Trump outcome, all of the Trump promises, and I think the market was digesting that over much of November.
What will he do? What won't he do?
Yes, and mostly positive from the market's point of view. I think if we look at all of his promises of lower taxes, greater tariffs, and that has potentially an inflationary impact, but I think less regulation. So the banks kind of like that, more prospects of more M&A activity, more corporate activity. So the market, on a net basis, enjoyed all he had to say. What probably the part that they didn't enjoy was more around the healthcare side, the potential looking at cutting prices there. So the healthcare stocks didn't do that well on the back of that. But on a net basis, a very positive November. And then in December, we had more news around the Federal Reserve. They cut interest rates by 25 basis points, largely as expected. But I think the fly in the ointment on that occasion was that the market was looking for a couple of more interest rates into 2025. And when they came out with their dot plot or their summary of economic projections, that's all of the estimates of those Federal Reserve members, they were pointing to maybe just 2 rate cuts in 2025. And that was a bit of a dampener. So we ended the year off on
because that was less than what the market was expecting.
Yes, it was less than the market was expecting. So we ended the year off on a bit of a whimper. But all in all, we had 57 all-time highs on the S&P 500 in 2024. So it was a fantastic year. We can give a little bit back at the end. And it was a great year all in all. And a great quarter, but mostly on the back of that great November we had.
You said it was a great quarter, but if you look at the market broadly, the US was a real standout compared to the other markets. It finished in positive territory. And some of the markets may have finished in positive territory, but if you convert to the US dollar, the US was the only one that was really positive because the dollar was really strong during that quarter. And I suppose that's going along with the Trump trade, as they like to call it. But maybe we can just touch on, we've spoken about the markets, bringing a bit home, the Sasfin portfolio. You mentioned a few things that didn't go so well. Maybe you can start with the healthcare and what went not so well there.
Yes, well, the healthcare, as I said, most of the negative around the healthcare sector was largely around potentially lower prices for drugs going forward, with the Medicare and the Medicaid prices that would be granted to pharmaceutical companies potentially being lowered. So less profitability essentially for the healthcare companies. But we also had that very unfortunate incident of the United Healthcare CEO being assassinated. And that was, it would seem, on the back of concerns that these big healthcare insurance companies are very lax in paying claims, they delay claims, and this was very much protest action in that regard, and just put more focus on the healthcare sector, which it didn't need. It was already on the back foot in the quarter. Exactly. So healthcare stocks were the real laggards in the last quarter, and in the model, United Healthcare was a big loser in that regard. I think in the healthcare space, where we have been a bit overweight, IDEX Laboratories also was a laggard in the quarter.
Still struggling to get the visitations at the veterinary clinics, maybe not as high as people would hope. So a lot of expected from that stock, and when it doesn't quite deliver, you do see it come off a bit.
Yes, and no real news to actually drive it.
Yeah.
And I think they were also a little soft on the outlook for the next year. So the market took a little bit of that. Novo Nordisk, we don't own Eli Lilly in the model, but that was also a little bit on the back foot. But
those two companies, the big weight loss drug companies that everyone's, if you've heard of Ozempic, then you've heard of Novo Nordisk.
Yes, and I think they maybe had a little Ozempic face.
Lost a bit of weight in the stock price there.
Exactly. Lost a lot of weight. But I think, again, concerns just generally about results of trials. And
which weren't that bad, but
the market expectations are way high, and just not meeting those high expectations. Those were on the back foot as well. So it just dampened the whole healthcare sector.
Yeah, I mean, the healthcare was a negative. On the positive side, the technology stocks did really well during the quarter. A lot of our names outperforming the benchmark. But you also found that the maybe more speculative tech stocks did really well during the quarter. We'd like to think we don't hold those type of tech stocks. So they outperformed these speculative names, but still happy with the performance of some of our tech stocks.
Very much so. So we had a great quarter for Apple, Microsoft. There were a couple that did really well, as you say. And I think just generally there's a broader improvement in earnings across the whole S&P 500 complex. And it's not just those Magnificent Seven or Famous Five or whatever that's been driving earnings. It's broadening out a bit. So there were other names, secondary names, if you like, that benefited. And maybe that just took a little gloss or relative performance off some of those big cap tech stocks. But the NASDAQ, I think, was up 6% in the quarter. So it just talked to a very strong technology sector in the quarter. I think it's going to continue. I think the AI theme's not going to go away.
Oh, no.
So AI, semiconductors, all of that, but it's going to be bumpy. We saw NVIDIA didn't have the best quarter, but it's had
still outperformed.
It's had
two fantastic NVIDIA.
Shoot the lights out years, and you can forgive it just a little softer quarter, but it was still, as you say, an outperform at the end of the day.
Yeah, I think NVIDIA's gone in a lot of the headlines over the past year or two, but two names that maybe have been a bit quiet on the AI front really showed up. The one was Alphabet. They had a lot of launches around AI and what they're doing in that space, just reminding everyone that they are still very much a leader when it comes to artificial intelligence. And then Amazon as well. Most people think of Amazon as the company you buy stuff online with or for, but they're also very invested in cloud computing and now moving into the AI space. They're going to be launching one of their in-house chips that they've designed, and it could potentially be a challenger to NVIDIA. We'll have to wait and see, but also trying to put their name out there for AI. We've touched on the stocks and how they performed, but I guess what everyone's really wants to know is what's going to happen next, and what does 2025 hold in store for us?
No, I think, firstly, in the quarter, it was a volatile quarter. We didn't make any changes to the model. We didn't add anything. We didn't take anything away. We are long-term investors. We do our homework. We look for the quality stocks. We look for those that are going to grow over the longer term. So to judge them on a quarterly basis is just nonsensical. But we still like them to perform even in the shorter term. It still looks good, but we hold them for the longer term. And I think those stocks that we've got, again, by and large, we're going to be holding those. We'll tweak around the fringes, but we're sticking to our philosophy, our investment strategy, sticking with our quality companies, sticking with our growth companies. And as we go through the year, we'll continue to monitor the quarterly results, to look for any changes. We are a bit overweight healthcare. Maybe that's a sector that might outperform a bit this year. That's the analysis that we'll do over time. But not looking for any big changes. The earnings outlook still looks positive for the market. In this first quarter, probably looking for around 12% year-on-year growth in earnings out of the S&P 500 companies. The consensus for the year is something like 14% for this year, 13% for next year. So there's still an underlying support for the market, even though it looks to be at, relatively historically higher valuations than previously. But yeah, we'll look at things. We build its portfolio up fundamentally from the bottom, and we'll continue to monitor those stocks and stick with our quality and growth.
Thanks, Craig. And to everyone out there, we hope to see you in the next quarter. Goodbye for now.